what do you make of this proposal? Would it increase volatility? And how important is the transparency of quarterly reports as opposed to reports every 6 months?
Yeah, we dealt with this in the 80s and 90s where there were proposals to mirror the Japanese companies that reported on a semi-annual basis. And the idea was to get rid of short-termism and focus on the long term. If you look at American companies, they are these days focused on the long term. And investors, I think, need the transparency to make sure that they're hitting their marks. So I don't think stretching this out to every 6 months would be helpful. I do think, as you ask, it would increase volatility because you would get bigger surprises as you wait longer for the information. The other thing that people aren't talking about is it will probably promote a lot more insider trading because portfolio managers would have to find a way to access information that's not in the public realm. And so I think you'd start running into areas that would increase the advantage for some and disadvantage the retail investor if the data were not readily available.
All right, so you're seeing a lot of potential issues, volatility being one of them, but also the potential for possible wrongdoing just because of the lack of transparency.
Yeah.
Okay. Gunjan, I want to come over to you. What are investors saying about this? How would investors view this idea? I mean, earnings reports can sometimes be a catalyst for someone to buy or sell a stock. If you're an investor, how would you view the idea of having that information half as much throughout the course of a year?
That's right, Frank. Most investors I've been chatting with about this proposal are not clamoring for a lower frequency of earnings reports. And in fact, I think this proposal will likely face opposition from big institutional investors. Take pension funds, other asset managers who often want more transparency and will push back on this proposal. And it's really fascinating because I think the trend in recent years has been towards a shorter business cycle and shorter term trading. I mean, you and I have talked about this 24-hour casino that has cropped up in financial markets, a lot of which does hinge on quarterly earnings reports and trading around that, whether it's in prediction markets, options, or futures.
Ron, I want to come back to you. A lot of this market's been driven by, in all fairness, excitement about AI, but a bit of speculation as well, especially when we're talking about retail investors. Does it matter to the average American? Gunjan was mentioning institutional investors. You hit on it as well. Does it matter to the average American investor if the reports come out every 6 months or every 3 months?
Well, I think just in the overall sense of increasing transparency, it doesn't matter whether you're institutional or retail investor. You want as much information as possible. And yes, as she suggested, that there's a casino-like atmosphere going to 24/7 trading and so on and so forth. But having said that, I think investors need as much information as they can get their hands on. And active retail traders, if you will, also rely not just on quarterly earnings reports, but also on the forecasts coming from the company every 3 months about their future prospects, about any information that they put out that's material in a timely fashion. So moving away from that, I think, it hurts both institutional and individual investors more than it helps.
All right, so we've had quarterly reports for about 50 years, I believe, about 55 years roughly.
Yeah.
So you and I we're talking off camera for a bit. It's actually possible for companies to report their numbers even more often than quarterly. Would you be in favor of something like that? Do you think that would be a positive move, maybe once a month? I mean, we have artificial intelligence, we have blockchain technology. There's a number of methods. It could be onerous for the companies themselves, but do you think that would be better for investors to have even more information than quarterly reports?
I mean, you could do probably too much if you were doing like daily, releases of, or just have an open book that everyone could see, 24/7. I think quarterly is perfectly fine. Monthly might be fine. But I lean towards more rather than less information. And as you say, with artificial intelligence, with the various tools that we have at our disposal, you can open the book on a company and make that information public as quickly and as often as you like.
All right, Gunjan, I want to come back over to you, the investor angle. Hypothetically, again, the SEC says it is investigating this idea, this proposal from the president to limit the quarterly reports. Would that open up investors to more headline risk, the idea that you don't have the same frequency of actual numbers from the company and the stock could move more on headline or speculation?
So, Frank, I think one possible outcome from all of this is that Trump does move forward with this proposal. It does pass, but a lot of companies decide, hey, we're going to report quarterly anyway, because our investors tend to like that. We've seen that in some parts of Europe where it's not a requirement for companies to report, but because investors are so hungry for this information and companies want to avoid those big moves around their earnings if they're going to report, say, every 6 months, they opt to report more frequently.
Right. 2 words, tape bomb.
Tape bomb. Well, you got to spell that one out.
Yeah, so that's when a company surprises everybody with an unexpected news event, that may come in the quarterly report. If you wait 6 months, that bomb is going to explode even bigger than it does on a 3-month basis.
So again, back to volatility, the idea that these quarterly reports could be even bigger market movers if they're less frequent.
Absolutely.
I want to come to both of you about one other issue. Robert Hum from our data team pointed this out. The overwhelming majority of companies on the S&P, they report pretty close to the calendar year. Do you think that that should stay the same, the fact that the reports are kind of aligned to the calendar? Obviously, there's some other companies that are off cycle as well. Is there a better way, Ron, I'm going to start with you and give Gunjan the last word. Is there a better way to do this other than so closely tied to the calendar year?
I actually prefer the calendar fiscal year. I mean, when you go off fiscal years and you're, September is the end of your fiscal year, just like the government does. I prefer calendars because it's more easily aligned and just, I think, more easily digested. It's not really a big deal, but it's just my personal preference.
Gunjan, one other idea here. Having everybody report on the same schedule or allowing more, I guess, flexibility or seeing more flexibility when it comes to reporting, would that matter to investors out there?
Investors I've been chatting with just simply have not been clamoring for a change to this. I have not heard too many say to me, this is, a hill that I want to die on. Some of them say, yes, it could cause more volatility. Others say, the jury is still out. We'll see how it shakes out. A lot of them do agree that this would advantage insiders at the company who may be able to trade based on news while disadvantaging, institutional investors and maybe, say, retail investors.